The sponsor of today's video is Webull. Simply use the link down below my description box, deposit any amount of money, and we each get 5 stocks. It's that simple, and by the way, it's limited time, so get on it. Use that link. Enjoy. Now let's get into the video. Well, we had a red day in the stock market today, ladies and gentlemen, after having a very strong bounce back day yesterday after the Fed press conference. Today we had the S&P go down 0.9%. We had the Russell down 2%. We had the NASDAQ down 2.6% as the Dow broke even and the VIX went up over 6.5%. So today, we have to break it down. We have to go over stocks, charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, subscribe, check out my Patreon if you want all my real-time moves in the markets, call-outs, more access to me throughout the day. All of that's on Patreon, link down below. And with that being said, let's get right into the video. So yesterday, if you guys remember, was a crazy day, right? We had the Fed press conference, and that was actually the second day of the Fed meeting. It started on Tuesday. It went through Wednesday. We had the Q&A from Powell, all that good stuff. And the markets were actually red in the morning yesterday. And after the Q&A, Powell speaking, all that jazz, right? We had the markets rip, right? I think the NASDAQ closed up 2%. We had the S&P up a bunch, Russell, Dow, they all did well. And today, the NASDAQ pretty much gave back all of those gains and some. We had triple Q down, like I said, 2.6% on the day. And before we actually talk about what happened in the markets today in terms of charts, let's go over jobless claims. Every Thursday, you guys should know this at this point, we get the jobless claims numbers. So initial jobless claims, which I think this was for the week ended December 11th, came in at 206,000, which is actually up higher than the 18,000 that we saw last week, which, by the way, last week, that 188,000 figure was the lowest level in 52 years, which is pretty crazy. And at this point, we all know the markets don't care too much about the jobless claims. I mean, why would they care about the jobless claims numbers now when they didn't 12, 16, 18 months ago during the pits of the pandemic when we were seeing million plus, figures for the jobless claims? Why would they care now if they didn't care then? But just know we're still seeing people filing jobless claims, all that stuff, and we got, again, a 206,000 number for the week ended December 11th. And the markets, like I said, we gave back a lot of the gain, and for QQQ, more than what we gained yesterday overall. And by the way, this morning, SPY hit an all-time high. So there's a lot going on, right? We hit an all-time high, then we sold off a lot. Volatility's back after we had a great day yesterday, and I just almost knocked my computer screen over there. But look, SPY hit an all-time high, $474.86 this morning in the pre-market, and now we're down about what? 2%, 1.5%, 2% off of those highs. So there was a lot of volatility from the top to bottom today in the markets. And based on this 4-hour chart, SPY closed above both moving averages. So this is a good sign, right? The 50 and the 180 SMAs here, we closed above pretty much both of those on this time frame, and we're still noticing a golden cross, the 50 crossing above the 180 SMA. So technically speaking, over the past couple of months, and now just recently, past couple of days, this still looks fairly bullish to me. I mean, come on, we just hit an all-time high this morning, guys. Now we're just pulling back, ever so slightly from that all-time high. So for tomorrow, I'm really looking to see, and for next week too, does SPY hold 465? Do we end up rallying back above 470? That is critical for the bulls. And when it comes to triple Q, let's pop that up. Triple Q failed to break 400 today. Again, for the 15th time over the past couple of weeks, we failed at 400, 401. We failed holding 390, and now we're pretty much testing that double bottom low from earlier this week at about 384 to 385. And if we take that point out, whether it's tomorrow, next week, let's say we go under 384. We're probably going to end up going to 380 and potentially 378, which was the low point from the beginning of this month. So triple Q is way more volatile than SPY right now. It makes sense because it's comprised of the big tech names out there. And today we had Apple sell off. We had Amazon down pretty much all across the board. The big tech names got destroyed, and we will talk about some of them later on in this video. So make sure you guys stick on throughout and while you're at it, if you haven't done so already, make sure to hit the like button and subscribe. We're trying to get 25,000 subscribers by the end of the year, so make sure you guys do that. It really helps me out overall in the YouTube algorithm. And with that being said, now let's talk about some stocks. So I've been very vocal about Adobe, ticker symbol ADBE. This is one of my favorite stocks that I don't own, right? It's one of my favorite stocks that I don't own, and today it went down 10%. This is a very good sign. Very, very good sign, but it's nowhere near, even with the 10% drop today, it's nowhere near where I would want to buy it, right? We're currently sitting at $566 per share. The recent all-time high was $700 on the dot, guys. Not a penny higher, not a penny lower. $700 on the dot. So at this point, it is down about 20%. So it's right just now with today's 10% red day. It got into a bear market, right? And I've been on record saying I want to buy Adobe anywhere from 300 to 400. At least that's where I would initiate a position. Now, if I had it my way, if I could snap my finger and pick a price, I would pick 200. 200 would be a hand over fist buy, in my opinion, for Adobe. And that's what you have to realize, guys. Stocks, the game of stocks is not only picking quality companies, right, like Adobe, but paying the right price for them, because you could pick great companies, but if you overpay for them, you're not going to do well long term. If I bought Adobe at 700, I'd be a shareholder of Adobe, a great company, but at a very overvalued price. So the name of the game is finding companies, especially for long-term investing, right? Finding companies that are fundamentally sound, they have a moat, which means they have a strong competitive advantage, and then you have to pay the right price for them, which for me, for my analysis on the back end here, 300, 200, that's the general area where I would love to be buying a lot of Adobe. So the reason why they sold off today is because they reported earnings and they didn't do that well in terms of guidance. Take a look here. They did $3.20 of EPS for the quarter, which came in line with estimates. 4.11 billion versus 4.09 billion in terms of revenue. So the EPS came in line, revenue beat, and then when it comes to guidance, the guidance was not good whatsoever. They see Q1 EPS of around 335 versus 338, so that's under the estimate. They see sales between roughly actually 4.23 billion, right around there, versus the 4.34 billion estimated. So Q1 EPS revenue guidance is under the estimate, right? And when it comes to full year 22 EPS and revenue, that is also a lot under the estimate. $13.70 of EPS versus $14.26 estimated, and sales for the next year, full year 22, is expected to be $17.9 billion versus $18.16 billion estimated. So guidance fell very short for Adobe, and the fact that the stock has run up so freaking much over the past year, look, from 420 to 700, the fact that it's ran so much, right, and the guidance slipped, it's not looking good, that is why the stock's collapsing, because it was pretty much priced to perfection, right? It was priced to perfection. So we're getting that big drop on Adobe, and could it be opening up for a nice swing trade right here? Absolutely. Take a look at the 3-year chart. It looks pretty good, right? We're right above the 50 moving average. We saw a healthy pullback, and let's say we do hold the 50 moving average around 550, 560, where we are right now. Maybe we do get a short-term bounce, which could be a nice opportunity for a swing trade. But as a long-term investment, very different. Swing trading versus long-term investing, very different. I still want it down to that 200 level. And look, it was $200 back in December of 18. So about 3 years ago, it was $200, and it went all the way to $700 this year. So could it go to 200 again? You'd be surprised, guys. If the markets did collapse, let's say we saw a bear market, this could easily go to $200 again. You just have to be patient and have a watch list of stocks that you like, you find value in them, they're fundamentally sound, and just be patient for the right price, that you want to pay for them, right? So Adobe's number 1, FedEx is number 2, which I actually own FedEx, and they reported earnings after hours today, and it seems like the stock is ripping. Take a look at this. We closed at 238. Now we're at 253. The inverse head and shoulders pretty much played out. We filled the entire gap to 255, which was the high from the middle of November. So let's see what they did. They ended up doing, let's see here, $4.83 EPS versus $4.28. So they beat EPS. Revenue came in at $23.5 billion versus $22.47. So double beat for FedEx. And they also announced a $5 billion buyback, including a $1.5 billion accelerated buyback program, which is great for me since I own the stock, and maybe some of you out there watching own the stock as well. You know, when companies buy back their own shares, that makes our ownership more, or it increases our ownership, right? Because they're taking shares off of the market, and the shares that are already owned by investors, they pretty much, the value of those increase, in other words, right? So they did well, beat EPS, beat revenue. The buyback is great. Do we have anything here on guidance? I'm not really seeing anything on guidance, but overall the stock is poised for a breakout at this point by the looks of it, especially if we break above 255. So if you guys are my Patreon, you know that I bought this stock at about 226 to 228 roughly. So now that it's up a nice chunk after market hours, I'm probably up like 10% overall on my position, maybe a little bit more, 11, 12%. So I put my alert at 255. I'm going to be watching to see if it breaks out of there. If so, this could open up as a nice swing trade as well. You know, we could start pushing, 280, 290. Very, very possible. Maybe not 290. That might be a bit far-fetched, but let's say 270, 280 in the short term, definitely possible. So keep your eyes on FedEx. QDEL is another one, ticker symbol QDEL. I'm noticing a clear-cut ascending triangle on this one on the 4-hour chart. We're noticing it's been uptrending for a couple of months, and at the same time, we're seeing resistance. We have been for a couple of months as well at about $154 to $155 per share, which is literally right where we're trading right now at about $153 per share. So I'm thinking if QDEL ends up taking out, let's say 160 for round numbers here, I'm going to put my alert at 160. Actually, maybe let's put it at 158. That's still a decently round number there, right? Not 160, not 155. We'll put it at 158 for today, guys. And if we take that point out, the ascending triangle might play out, and we might start ripping up towards 170, 180. And overall, this stock, I think it was a lot higher at one point. Yeah, it was $300 per share. That was recently, back in August 2020, so a little bit over, almost a year and a half ago at this point. So if this plays out, I'm telling you guys, if we break 155, 160, QDEL is probably going to go a lot higher. So keep your eyes on it. And we had the gold stocks today absolutely go ballistic. I mean, gold in general did very well. Same with silver. I mean, if you guys paid attention to the metals market today, gold went up 2% on the day, which is great for gold. It's back over 1,800 an ounce. Silver went up 4.4%, and it's above 22 an ounce again. And at this point, we had a lot of the gold stocks do very well. And full disclosure, I own GDX, which is a gold mining ETF. It's not junior miners, though. It is, I guess, senior miners, what you call them. GDX, right? I personally own this. I've owned it for a while. And the one I want to talk about today is Newmont Corporation. This is one of the more popular individual gold stocks out there. This one up 9%, almost $5 on the day today. And it seems like we filled the entire gap up to about 59.60-ish, which has been resistance ever since the beginning of September. So I think this one's really gearing up for a breakout, especially if we break above $60 per share. We're going to use that as the resistance or the alert for today, and I'm going to keep it as an alert, obviously, until it hits. So, and that's if it hits. Who the heck knows what's going to happen, guys? As always, I'm not a genie, a wizard. I don't know the future, but we're just breaking down stocks, right? So if this breaks 60, we break out of the channel we've been in for 4 months almost. This is probably going to start going mid-60s, especially if gold continues running now on, the heightened inflation that we're seeing, the Fed admitting this inflation. I think it's going to go higher, to be honest, or else I wouldn't be, a holder of gold, the physical metal, or gold stocks. So yeah, NEM, watch out for it. CMA, Comerica, we called this out a couple of days ago, if you guys remember, maybe 2 days ago, and that was at around $81, $82. Now we're trading at 87. Today we had a 2.4% green day, up $2, and we broke out of not the 180, but the 50, both of them, both moving averages on the 4-hour chart, and it seems like the double bottom breakout is panning out on Comerica. I think this is probably going to start going towards 90 to 93 bucks per share, which is what we called out a couple of videos ago. So this one is looking good, and I think there's more momentum as we are breaking out of the moving averages. And the next one here is Apple. Good old Apple, guys. It almost hit, not there yet though, but it almost hit $3 trillion market cap the other day, and now we're getting a lot of selling in Apple. Today it went down 4%, which, what have I said many times on this channel, guys? Apple, I don't want to say Apple is the market, but Apple's a very big part of the market. If we see a huge sell-off in Apple, you know what that's going to do, guys? That's going to cause the overall markets to take a hit. And we saw Triple Q went down 2.6% today. That is very much because Apple went down close to 4% today, and a lot of other big tech stocks, Amazon 2.5%, and the list goes on. So once you realize Apple and the big tech names control the market, and the Fed, of course, you're going to be in a better place because you're going to understand how things work, or how things are, the beginning of how things work. So Apple went down 4% today. We're seeing a double top play out here on the 4-hour chart. We hit about 182 recently. We hit literally today in the pre-market 182 again, or 181 roughly. So we're getting that double top sell off, and we're holding on by a thread above the 50 moving average, which I believe that's going to fail. I think it's going to fail there. And actually, I don't want to say that for sure. But if we start breaking under 170, so I'm going to set my alert. Mark is at or below $170. If we break under that point, that is where we might start collapsing. Maybe down towards the 180 SMA on the 4-hour chart, whether it's 160, 165. That is where we're probably going to start going. So keep your eyes on Apple, guys. There's weakness. And again, once you realize the Fed and the big tech names play a massive role in the markets, you're going to be in a much better place, right? So keep your eyes on Apple, big tech in general. This is going to be very important moving on here. And JP Morgan, the last one for today. JP Morgan ripped up today about 1.5% in the midst of all the selling today. And we had a nice pop above the 50 moving average on the 4-hour chart and the bottom of the channel here. And now that I'm looking at it, JP Morgan's up another 50-60 cents in the aftermarket hour. So it's actually continuing this rally. And earlier in the day, it was up almost to $162 per share. So in my opinion, JP Morgan has a way to go. I think it has potential to go back to the mid-high 160s. And dare I say 170s. I think it is going to be going there eventually, as it is holding the channel. It's holding the bottom of the channel right now. And, the pattern, it's played out many times in the past. And we just have to be patient with it. We have to see what it's going to do. So overall, guys, that's pretty much it. I'm in a position right now where I'm holding a good amount of cash. I have a video coming out soon where I'm going to be going over my 4 most undervalued stocks that I'm looking to buy heading into 2022, and you guys might know some of those, you might not. Make sure to subscribe because I'm going to be dropping that video soon. So if you all enjoyed this one, hit the like button, subscribe, check out my Patreon, leave me a comment. If you guys want to join the Patreon, it's linked down below. All you have to do is click the link, try it out. You get all my buys, sells, call outs, morning update videos, more access to me throughout the day, and you can literally cancel it whenever, and you won't be charged again, right? So check out the Patreon, and make sure to get your 5 stocks from Webull and your $50 from M1 Finance, and that's it. I'll catch you guys in the next video. I'll pop one up here. I'll see you there. Thanks for watching as always. Keep crushing the market. Stay safe out there. Peace out.